So you see this right here on the left side of your screen. I'll make it bigger. I get this question a lot. This is what's listed under the thing that says my portfolio. That is my portfolio of what I personally trade. So I'll give you guys a few seconds to look at it. But it's euro dollar if you're listening and not watching. Euro dollar, pound dollar, euro yen, pound yen, dollar Canada, Aussie dollar, New Zealand dollar, and the youngest of the group, Aussie Canada. And the question is, why are they in my portfolio? Because these are my best employees. These are my best employees. When I need a project done, this is the A team. These are my top flight mercenaries, right? My kill squad. My suicide squad. Yeah, but these are my best employees. So these 9 right here. I used to trade 20 very early on in my career. I found it to be overwhelming and it was more hurtful than helpful to my trading. So I locked in on 9. Before I was at 9, I was at about 11, and there were 2 that I removed, Euro Aussie and Pound Aussie, which I really love those pairs. I just removed them because of the circumstances at the time. I could bring them back. I just don't really have a need to. But those are my 9 pairs. So let's take a look today. Let's start. Let's put TradingView back up. Well, let's go to dollar yen. Let's see if dollar yen is still interesting. All right, dollar yen. We're gonna go to a daily chart here in dollar yen and see what's happening. All right, so dollar yen. Right. So let's look at something real quick. Let's just use the knowledge that we talked about earlier. What type of trend are we in? And this can be a perfect example. I think Daniel asked this question. The most basic sense. Where are we moving? Just look at the chart. Bottom left to top right. Correct? Oh, sorry. It would help if I scrolled down. Sorry about that. There, you guys are typing up. I was scrolled up. I didn't see anyone typing. I thought I lost you again. I have to deliver more threats. But yeah. Now, this is interesting. I'm not sure if it was Daniel, but someone just asked a question about false breakouts. We had a nice little false breakout here, where we had a violation of structure and then it was immediately engulfed by the next candle. So that's a false breakout. Now, we are currently at a level of previous structure. How do I know that we're at a previous level of structure? Again, these are simple questions, but I want you guys to answer them. 1, I can see it on my chart. 2, there's a big red box there. Yes, right? Again, why I like having these on for my personal trading. I identify structure on my own, don't get me wrong, but it makes me aware of what happened in the past. So by seeing this big red box from the past, oh, Keel, we're not in a full-blown uptrend and I shouldn't be buying at the ceiling. I should be paying attention to something. And it's going to be a previous level of structure looking left right here. Now, what I would be anticipating here, because if we go to, I don't know if I want to load up a weekly here. Let's try it, see what happens. That's not bad. Sometimes Ninja takes a long time. I don't often go to the weekly. I'm just going to go to TradingView real quick. Give me a little bit more data without needing to load it up. Let's go to TradingView real quick. We already kind of know perspective, right? So we're trading at this level right here. We know that this is a previous level of structure, right? I have no interest in buying at this level. The sell already happened. What we're actually putting in also is a classic pattern in a different type of way. This is going to be called an inverted head and shoulders pattern, right? So we have a move up here. I'll draw it like this. Oops, sorry. We come up to test previous structure. We come down. We come up. We come down. We come up. We may end up creating what's called an inverted head and shoulders, which is basically it's a consolidative pattern. And when it forms in this type of situation, we would look for a breakout. Now, if we bounce up to the weekly, we can also see that we have a tight range of consolidation right at our previous structure highs. So to look at this in a little bit of a kind of a psychological perspective, right? We're at a previous level of resistance, right? We would expect who to be interested at a previous level of resistance, buyers or sellers? We'd be interested in sellers, right? Now, if you're a seller, put your shorters, put yourself in the seat of a seller, right? You are a seller. You're in a supermarket, right? If you see a price that is very attractive to you, are you being really aggressive with your sales, or are you kind of waiting? If you're going to the supermarket, you see something on sale, it's at an awesome price, are you being more aggressive to run and get it? Or are you kind of like, maybe I'll get it, right? You're looking to get it, right? It's at a discount. You're looking to take it. So I look at this perspective because this is crowd psychology, right? If the sellers were extremely interested in this level, would we be hanging out here? No. We would have seen a sharp reaction, right? Just like in other areas where sellers were highly interested. So the fact that we're not seeing a sharp reaction here, that we're consolidating in a tight consolidation, they tried to push it down and they failed, right? We saw that in the lower time frame. They tried to push it down and they failed. The fact that we're hanging out here in this tight consolidation pattern, that shows me, now it's not enough to enter yet. I'm not going to enter off this. It's not enough information. But that shows me that the buyers are keeping the pressure on, and or the sellers aren't very interested. So again, this is not enough information for me to buy. I think that's one of the biggest mistakes that traders make. It's like, well, Q, let's buy right now. Well, no, there's nothing rules-based that say I should buy. I don't want to waste money. But what I'm doing is I'm mentally positioning myself using an if-then syntax to prepare for the next trade, right? So if we violate this level, right? Let's say we get a candle that looks like this. If we violate this previous level of resistance, then I would predict that price is likely to go up. And where are we likely to go up to? Well, our next level of structure up there. So what I'm doing as a trader in this situation is I'm waiting for confirmation of the break of this level, the violation of 115s. Should move this up a little bit, 115s, because we have this little deal back here. I'm waiting for the violation of that level. And if we get a violation of that level, then my anticipation is that we're going to travel. I can never find these tools on TradingView. I'm horrible. My anticipation is that we're likely to travel to our next level of structure. So this is part of what's called top-down analysis, right? Where I use my higher time frame to just set up the trading idea, right? Did I talk anything about entries, how I'm getting involved, when I'm buying? Did I do any of that stuff? We always want to jump to that stuff first and foremost, right? We always, well, how do I buy? What did I tell you earlier? That's the least important part of the process. All I'm doing is I'm standing tall on this very high mountain. I'm overlooking the land, and I'm making a prediction. And why that is helpful is because, again, we look at trends, and when we go down to lower time frames, it turns into a funky mess, right? Things get weird. It's nice and calm up here in the weekly, right? The higher time frame you go, we're talking during the break. Lower time frames are a lot of noise, a lot of fake outs. Higher time frames, it's nice and calm, right? Once I start going down to lower time frames, it's going to get messy. And when it gets messy, it's very easy for me to lose my perspective. Have you guys ever started off on one time frame with a bullish idea, and then you go down to a lower time frame and now you have a bearish idea, and then you go down to another lower time frame and you have a different idea? Right? That's not good. That's not good. You're bouncing all over the place. What I want to do here on my higher time frame, I want to establish my idea. I want to establish my directional bias, my confirmation bias, a positive confirmation bias. So what that means is that I only want to look for longs. And when I go down to my lower time frame, I'm only looking for clues and ideas that fit within my perspective of only looking for longs. And doing that, I can concentrate 100% of my energy on only looking for longs instead of saying, ooh, I can get long this way. Ooh, but I can get short that way. Because I'm not doing anything that way. I'm not consistent.